Let me ask you this. Are you a business owner and need a business funding, but you have a low FICO score? So this makes it impossible for you to personal guarantee. Now, in this video, I want to introduce you to a business card where you can skip the personal guarantee and still get the business funding you need to be a successful business owner. Now, typically, when you go to traditional banks like Bank of America, PNC Bank, Chase Bank, American Express, you will have to have good personal credit to qualify for a business credit card, typically with 0% interest. This is called a personal guarantee, where you as the business owner will co-sign for your business in order to get their financial products. Now, this strategy is super effective. Here's why. You don't have to put up any collateral such as cash, maybe your car, or even your home to qualify for a business credit card. You also can get high limit credit cards with 0% interest without showing little to no proof of income. So because most banks typically will let you state your income, or you can project your income in order to qualify for their products. Now, the downside by you leveraging your personal credit and you don't have to put up any collateral because your personal guarantee, the credit line, if you default on that credit line, the creditors and lenders can come after you personally. Are you tracking? So what I'm saying is there are pros and cons to everything, right? Now, here's the deal with this particular business card, what I want to introduce you to. Although you don't have to leverage your credit score, this means a FICO score is not required. There's no hard pull, there's no soft pull, and you can still qualify up to $250,000. However, it is predicated off your business income, your business revenue, because you have to give the bank something. If you're not giving them your personal credit profile or your business credit profile, now they want your business income. So if you're in the transportation industry, if you're in the restaurant industry, if you're in the real estate industry, it doesn't matter, because you can be in the industry to qualify for this business card. As long as you have strong cash flow, right? If you have strong cash flow, you can qualify for this card. And this card is called the Revenue Business Card. Now, this business card is really unique. Here's why. Not only do you get a physical business card, and it's a Visa, so this means you can use it anywhere that accept Visa to pay your business expenses. It also, you get a something that's called a flex line, which is a unsecured line of credit. You only pay for what you use, and you have access to cash up to your approved limits and pay it back over time out of the sales revenue. The amount of your flex line depends on your business performance. So let me break this down, how everything works. And then I'll break down how do you qualify for the Revenue Business Card. Okay, so let's break down how the Revenue Business Card works. First, you gotta apply. Once you apply, it takes you about an hour to get approved. Once you get approved, you have access to the funds in 24 hours. So here's the breakdown. Revenue buys future receivables for your business. In other words, they buy a portion of your future business revenue at a discount and give you access to working capital in return. That working capital becomes your spending limit. Now, if we was comparing this to a traditional credit card versus a revenue business card, the breakdown would be like this. Traditional card is based off what? Your FICO score. That's number one. The second thing, you get an interest rate, which we know as an APR, right? You have to pay it back in interest. Number three, once you do pay it back, you pay it from your checking account. It can be your business checking account or your personal checking account. That's how you pay off a credit card. That's how a traditional credit card works. Now we transition over to the revenue business card. It's a little different. The revenue business card is based off your revenue. It's based off your business income. That's the first thing. Number two, instead of an APR, you get a factory rate, where the interest is based on a fixed amount over a fixed period of time with daily or weekly payments. So now we know how the revenue business card works. Let's take a look at the qualifications, which is really important, right? How do we qualify for this business card? Well, number one, you have to be a US based business. So the business has to be in the US. Number two, you have to be in business for at least 1 year. Number three, you have to be making business income, business revenue, at least $20,000 monthly. And if you're making $20,000 a month, you have to have a business checking account. It cannot go off your personal checking account, Remember, I always tell you, you're not in business until you have a business checking account. So those funds need to be deposited into your business checking account for $20,000 per month. And the average daily balance at least need to be $1,000. Now, also this card provides great benefits. For one, there's no fees, no annual fees. There's no fees involved in this business card. Number two, there's no FICO score required. So there's no hard pull, no soft pull. There's no minimum FICO score required. There's no FICO score required at all. And there's flexible spending limits with no cap, no limit. And most importantly, there's easy approval when it comes to getting this card. Now, I know what you're thinking. Man, this information is so good. This YouTube channel is so good. I need to subscribe and hit that like button. Nah, but please subscribe, hit the like button if you didn't already. Thank you so much for supporting the channel. But I know what you're definitely thinking. Oh man, I need to make $20,000 in order to qualify for this business card. Yes, so here's the thing. Remember, you have to give the bank something. If no FICO score is required, no business credit profile is required. Oh yeah, and by the way, they do report your business activity, this particular card, do report it to Dun & Brad. So you are building business credit. Now, if you don't have to have a FICO score and you don't have to have a business credit profile already established, well, you have to have business income. You have to have business revenue. Because remember, the banks only care about two things: your ability to pay them back, which is based off your business income, your business revenue, and also your willingness to pay them back. Are you willing to pay us back based off your business credit profile or your personal credit profile? So if they don't want the willingness, they want the ability. They want to make sure that you're making income. So for individuals who do not have a good FICO score, right? A 680 or 700, or who FICO score is just really low. Maybe you got a 500 or below that. It doesn't matter, but you're making income, you're making revenue in your business. This is the perfect card for you. You can get as funding as little as 24 hours. So the link is in the description. Make sure you hit it and make sure you go apply. It won't cost you anything. If you're making the revenue, let's get you funding today. See you on the next video.